Can Budget 2025 give the Indian economy the kickstart we need? First, the context. Concerns about India's economic slowdown are growing. With GDP growth hitting a 7-quarter low and forecast revised downwards, the outlook demands attention. Remember, the GDP growth in second quarter of financial year 2025 has dipped to 5.4%, the lowest ever in nearly 2 years. Adding to concerns, the Reserve Bank of India has lowered its GDP growth forecast for FY25 to 6.6%, down from the earlier estimate of 7.2%. The lower GDP numbers come amid an already growing concern about reducing private consumption, with the middle class tightening their pockets. Retailers have also pointed out towards signs of a struggling middle class, a group that forms the backbone of consumer spending. Particularly the FMCG industry has warned of muted volume growth this year owing to price hikes and inflation. FMCG majors Dabur, Godrej Consumer have already warned of a slowdown in consumer spending ahead of their third quarter earnings. But all is not bleak. While a slowdown is being witnessed in the urban areas, rural demand continues to grow. The gap between urban and rural demand is also closing, as was shown through Household Expenditure Survey, which was released last week. The difference in average monthly consumption expenditure between rural and urban households narrowed further to 69.7% in 2023-24 from 71.2% in 2022-23. Even when it comes to vehicle sales, there are indications of a small car revival, with Maruti Suzuki recording its first small car sales growth in 20 months, pointing perhaps to a rural recovery and more spends at the bottom of the pyramid. With all of this, the big question today is how much trouble is the Indian economy actually in? Is this a temporary blip, as the Finance Minister Nirmala Sitharaman has said? More importantly, what can the budget do to kickstart the economy? With that, let me introduce our speakers for today. Rahul Bajoria, Head of India and ASEAN Economic Research at BofA Securities, joins us on the show. I'm also speaking with market veteran Ajay Bakka. Welcome to both of you, and thank you so much for joining us on the first episode of The Big Question. Rahul, let me begin with you. And I spent some time setting up the context of where we are. I want first your assessment as you see the state of the Indian economy, and whether you think the last GDP numbers we saw, were there a blip? Are you worried?
Thank you, Tamanna, and very happy New Year to you and to your viewers. So I think it's important to get the context right. So, we have come through over the last few years through a fairly turbulent period, and despite that, the recovery out of the pandemic has been reasonably strong, and it's kind of showing signs of a fairly broad-based nature of recovery. Now, in that context, in 23-24 fiscal year, growth rates were surprising significantly on the upside, and what we are effectively seeing is a reversal of some of that dynamic, with excess savings in the system, particularly in urban areas, kind of starting to fade out. Policy tightening both on fiscal and monetary side having a negative impact, and then income growth also normalizing. I mean, is there a need to panic? I don't think so, but is there a need to also worry? I would say a little bit yes, because what we really need to see is that in the next 2 to 3 years, with the balance sheets being reasonably clean on the private sector side, both for corporates and for the banking system, household debt levels, while rising, still remain very low from a historical context, especially when we look at our peer countries. And so India needs to prioritize growth, at this particular point in time. With that particular dynamic, I think the budget becomes a very important exercise in terms of at least improving the sentiment. Now, from a 5.4% growth print, is that a natural steady state? Absolutely not. Already, partly because of festive spending, but also because of some recovery in industrial indicators, we are seeing growth momentum, particularly in high-frequency data, improving, but it is still not at a point where we would say that, we are close to our trend growth rates of close to around 7% as the RBI has been flagging. So I think there is a need to do something as far as policy is concerned, but, there is also no need to be very, very despondent as far as the new year outlook is there.